Hey guys, J.King, self-made millionaire, coming to you from millionairepenny stocks.com, where we're teaching and training our students how to become self-sufficient in the stock market. Today I wanted to talk to you about OPGN. Guess what, guys? Got this trade incorrect, got it wrong. This was our first newbie trade. We started off with about 3,000, and this is my first newbie trade. I'm showing you how to grow a small account and turn it into $100,000. This is not going to happen overnight. I'm going to tell you that right now. Anytime you're dealing with 3,000 in the stock market, it is challenging. And one of the reasons it's challenging is because you're restricted by the PDT rule. And so the pattern day trading rule says basically you have to have over 25,000 in your account to continue making multiple trades. So if you're under 25,000, then you're restricted to the PDT rule, which only limits you to about 3 trades, I believe, every 5 days. So if you trade 3 times and you execute those trades in the same day, you have to wait 5 days for those trades to clear. And so remember, when you're growing an account at $3,000, always remember, if you start off with $3,000, 2,000, or 1,000, you have to be very meticulous about your trades, very meticulous. And so one of the reasons I chose to dip by OPGEN is on December the 13th. There was a press release that went out that really doesn't manipulate me. I don't really govern my life by information and news of a company, because most penny stocks are garbage. Most of those companies don't amount up to hill of beans. That's why I do not invest in those companies. I trade them, but I react to the price action, momentum, volatility, and volume. And if I see a volatile spread, which is simply a fluctuation in price, you can see here, look at this particular chart all the way down here on December the 13th. This stock went all the way up from 110 to 310. And this was a wonderful time to get in on a breakout, but also too, if you identify the resistance levels throughout the day, you could have shorted this stock or bet against it at around 280 to $3, and you could have rolled this all the way back down to 120, 110. So this was also a good trade on the way up. And then also, I've told you this before, shorting is when you bet against stock. You're going to benefit from the decline of the stock when the stock drops. So you could have also made money as well on the upside in the collapse of this particular stock. And so the reason we bought this was I missed the breakout. Remember what I told you, if you miss the breakout on a stock, then always wait for it to hit resistance levels. And if it's volatile enough, and if it has a nice spread, if you can be patient, then you can ride that stock on the way down. But since we missed the breakout and we also missed the short, this stock found support. Now let me say this, it went all the way back down to $1.20. Normally when stocks don't hold their gains well and they're not showing a progressing state of going up and up and up, I normally won't dip by this, but I dip bought this because I saw the volume, and I wanted to give it a try because it went all the way back down to where pretty much it opened up at, and that's kind of signs of collapse, and I kind of did understand that. So understand, I did kind of break my rules buying something like this, because even though I dip off this, the volume was good. I don't like stocks to open up at $1, go all the way up to $3, and then come all the way back down to $1, because that's not showing that stock is holding its gains through the charts. So this was something I chose to do. Kind of broke my rules a little bit, but what I do want to show you, what looked good was, if you notice real closely on OPGN, if you can look real closely, notice that I bought 500 shares at 116.67, which is at around 117, and then I sold 500 shares at 115. Notice that I only lost about 27 cents. I mean 27, yeah, well, not $27. I'm sorry, 26 to be exact. I think it was like 26.84, somewhere around there. But I had to do that because I had to minimize my risk on these trades. Now, this is really important to talk about this, because a lot of stock gurus and coaches and trainers, they have algorithms and they have systems set up where they don't show you all of their trades. And a lot of times people are losing 95% of their trades. They're losing on several trades, and they're not gaining a profit because they want to show you the trades that they make money on, but they don't want to show you the trades that they have to take losses on. Now, this is a part of trading. If this is not something that's for you, then you need to exit. If you have a poverty mentality, then this is not going to work for you, because at some point you have to exit trades and you have to take losses. And so I want to teach you how to go to the next level in the stock market, but you have to start somewhere. If you open up a trading account, open up an account with about 1,500 to 3,000, and we're going to start making a lot of smaller trades. so I can show you how to build an account. Now we are at 2973.15, $2,973.15. I don't put money into my trading account because I want to let my art and my skill set produce results. I don't want to just put money in an account that's not going to help you build your account by doing that. And pretty much you're not educating yourself and you're not really trading with skill and with reality. By doing that, a lot of traders, they like to keep putting money in their account, and that's not a good way to trade because you're really not making a success off of your trading. You're bringing money from another source, and you're not creating a business out of this. So if you want to really create a business out of trading, don't keep adding money to your account. Let your skill set, let your art, uh, let your discipline speak for itself. And if you're learning, if you're being educated properly, and you're identifying a system that will add value to your trading, then it will show up in your trade. So you'll see my account. If I lose on the next trade, I'm going to do my best to minimize my risk. The whole goal is before I even go under 2,900, the whole goal is to capitalize off of 2 or 3 trades. And as you can see, when you minimize your risk on trades, this keeps you in the game. You're able to make several trades. Usually on a $3,000 account, I'll probably trade anywhere from 40 to 75 times a year. Normally, I don't trade with small accounts like this. This has been a while since I've went back to $3,000. It's been a long time, really, to be honest with you. And this is really challenging. And I accept the challenge because when you're under that PDT rule, and you have to basically minimize your basically how many trades you make. It's not easy because the SEC, they have certain laws that they basically have implemented. And if you're not familiar with the PDT rule, the pattern day trading rule just says you have to have at least 25,000 in the account to make multiple trades. So if you see 6 opportunities, you're not going to be able to capitalize on all of them because you're only able to make up to 3 trades within a 5-day period. And so it's very important to understand this because if we understand this, then we know the reality of how to build wealth. And so this is the key. The way I'm teaching you, it's the best foundation to get started. You should start off paper trading. A lot of people they start off with real money, but you really should start off paper trading because when I got into the market years ago, I heard a lot of people, they were just emotionally gratifying people trying to get you to sign up so they could make money. I already got money. I don't have to try to get you to sign up. It's funny when some people, they come like, "Oh, I don't want to pay. I don't have the money." That's fine. If you don't think your education is worth any money, then this is not something that's for you. The purpose for me saying, "Hey, sign up with millionairepenny stocks.com" is you're showing value in yourself and you're showing value in the information that I have to give you. Because first of all, I'm gonna tell you, and I'm gonna keep it 100. I'm transparent about my trading. I'm transparent with you. I'm not gonna, say, "Hey, I'm making these trades and I just made 50 grand in 1 minute." I'm not gonna lie to you. If I make 30,000, which I've made 30 and 50,000 on trades, but if I do that, you'll see it. I'll show it to you. But right now, I'm starting most of my students off with $2,000 to $3,000, showing you how to build a small account over a period of time. There's sometimes some trades that go from $2 to $50. You have to stay engaged in the market. If you're not engaged in the market, there are going to be trades that pass you by. Sometimes I will buy 250 shares from 2 stocks. I may see a stock that's at 40 cents. I may buy 250 shares from that stock. I may go and swing trade that, and I may look at another stock with that's $1, and I may buy maybe 300 shares from that stock and just sit down and hold on to it and wait to see if that stock is going to break out. There are many different methods, many different strategies that you can implement. But what you have to understand is trading is an art. It's an art that has to be developed. And as you develop that art, then what begins to happen is you begin to find out what system will help you tap into a higher version of yourself as it relates to trading. Remember, everyone has a system they have to tap into as it relates to trading. A lot of times you get cats that will talk to you about trading, but they've never made 1 penny in trading before. They've never actually placed any live trades. So don't listen to people that tell you about trading that's not trading. Listen to cats that are trading. Listen to people that know what they're talking about. I mean, I'm a self-made millionaire. I've been doing this for over 17, 18 years, and I love to trade. But what I'm learning is I'm learning how to be a better coach. Right now, I'm learning to coach. I'm learning to train. And where people are having the biggest problem is learning to take a small amount of money and grow it over a period of time. So that's what I'm here to do now. I don't need to show you all of my brokerage accounts. It's none of your business. You just need to learn how to trade. And we say this several times, and I say it again, and I believe it's apropos, is go to howthemarketworks.com. If you look at my screen, Let me type this in, howthemarketworks.com, and you can open up a free paper trading account. And it's free, guys. Go here and sign in for, I guess it costs about $1 million. And then once you sign up for that, you'll be able to make paper trades. It doesn't cost you any money. It's free. It's virtual money, so it's not real money. So you don't have to connect it to your bank account or anything like that. But it connects you to the market. It is a 15-minute delay, but it's really good to practice your skill set as it relates to trading. And it will sharpen your mind, it will sharpen your skill. You'll begin to learn different strategies as it relates to trading. The key to trading, the key to becoming a success in trading is learning what strategy works for you. Whether you're doing Forex, options, futures, or stocks, what quadrant works for you. And then once you find out what quadrant works for you, then, or category, when I say quadrant, then you have to find out what method works for you. You're going to have a lot of different people teaching you and training you about methods and different systems and methodologies, but what system works for you as it relates to trading? What system? And so, primarily me, I like to short or bet against overextended stocks. I like to be patient. I like to find stocks that have lost momentum and they begin to gap down. And also, too, I like to do a huge dip buys. I like to find stocks with low RSIs, relative strength index, and I like to find stocks that go from $6 now to discounted prices at 80 cents or $1, and I like to dip buy those plays and try to get a 50 cents to a dollar upside on stocks like that. So I have several different strategies I use, but the two strategies are dip buying and shorting stocks that are overextended. I like to look at pump and dumps, companies that have horrible financials. Eventually, they're being basically helped by a paid promoter, and eventually those paid promoters, they'll be paid to advertise the company, but sooner or later the company doesn't have the financials or the balance sheets to basically validate its existence and its price action. So sooner or later that company is going to collapse, and it's not a matter if it will collapse, it's a matter when it will collapse. And so you'll learn in the stock market, shorting stock is real interesting, betting against it, because most stocks are going to collapse eventually, but it's getting in there at the right time, having the right entry and exit points into some of those trades. One of the reasons I'm a millionaire is because I learned how to short stock years ago. And most of the people I was training and teaching, when I began to do this, it was funny because most people looked at me like a cow to new gate. What is shorting stock? What do you mean you can short stock under $3? And a lot of people didn't even believe me, and I didn't even know people were teaching on it. And I was shorting stock, and I mean, it was incredible because I would notice these patterns. I didn't know before I even started reading books. I didn't know that these patterns were in books at one time. I didn't even know other people had tapped into these patterns until I saw so many other wonderful traders that were way better than I was. And I read different books of all these different people that had tapped into these patterns. But yeah, they're patterns you'll recognize. You recognize stocks that go from $3 to $10, and all of a sudden they lose their momentum, and man, that stock will gap all the way down from $10 to $3 or $4. And I've seen several different stocks with these patterns over the period of years. It took a while for me to really capitalize off of shorting, because it was a different mindset that I was used to, because I was so used to the traditional way of buying stocks and selling stocks. But when I learned how to short stocks, my trading went to another level years ago. And what I began to do is I began to wait for companies to lose their momentum, to lose all the emotional hype, and I began to focus more on my intraday trading, going in the daytime, going in about 1 or 2 o'clock when the stock consolidates, and taking huge positions. I mean, on some of the trades, I like to take 10, 15, 20,000 shares. This is what makes you a millionaire, is when you build profit. Remember this, you have to build profit first. You don't build profit by putting money into your brokerage account. You need to build profit by making good trades. And as you build profit over the period of time, you make 100, 200 good trades. Next year, you make 200 or 300 good trades. And before you know it, man, you have a lot more. You have a lot more eggs in your baskets to play with. And so, I like shorting stocks, and I like betting against them. I mean, that's one of the things I love doing. You'll see me buy stocks periodically, but I'm a short seller, man. That's just what I do. And I like shorting 10, 20, 30,000 shares sometimes. I love doing that, but I love for the stock to consolidate first. And I like for it to find support. And usually when I see those resistance levels and I identify the support levels, then I make my decision based on how I want to enter into the trade. But the next level thinking, the next level consciousness is you have to get into buying 5 and 10,000 shares. You're gonna have to get into that eventually. But starting off with a small account, you want to start off with 200 shares and 500 shares. to build a small account. And then as you grow, then you can enter into a higher state of consciousness as it relates to trading and learning how to trade like a millionaire. Again, this is J.King, Self-Made Millionaire, coming to you from MillionairePennyStocks.com. Don't give up on your trading. Remember, even if you make 1 or 2 trades a month, at least set a goal for yourself. That's the key to trading. Set a goal. At least make 1 trade per month, or 2 trades per month, 2 trades per month, or even maybe 3 to 5 trades per month. But remember, don't start off with real money. Start off with a paper trading account, a virtual account. You can go to howthemarketworks.com and you can set up a free brokerage account that will help you paper trade. This is J. King again, Self-Made Millionaire. Have a great day. Bye-bye.